Okay. So this 70,000. Okay. We are saying that capital reduction account should be prepared as if it is profit or loss account. Income should go to the credit side, loss or expenses should go to the debit side. So let's take the first one, which is the existing 7,000 preference shares are to be exchanged for a new issue of 30,000 8% preference shares and 40,000 ordinary shares, both issued at what? 1 cedi. So the preference shares, which is the 5% now they are saying that 30,000 of this will be issued at what? 8%. The remaining 40 will be issued at what? Will be changed to ordinary share issue at what? 1 Ghana cedi. So you can see that in all we are giving them the 70,000. There is no gain, there is no loss. Are we okay with that? The 70,000 are now 30,000 will be issued as preference shares at 8%. 40,000 will now be issued at what? Will now be changed to what? Ordinary shares. So the first thing that we have to go is that we are changing the preference shares to ordinary shares. So we have to come and increase the ordinary shares account, which we come and say preference shares. Then we have 40,000. For the capital reorganization, there won't be any gain or any loss on this particular transaction because it is a 70,000 that they are splitted into what? 30,000 and now 40,000. So there will not be any gain, any loss on that. Are we okay?
Okay.
All right. Let's come to the existing ordinary shares are to accept a reduction of 50% of their shareholding. 50% of their shareholding. So what will happen? What is the total value for the ordinary shares? What is the total value for the ordinary shares?
200,000.
If you are accepting 50% reduction, what is happening?
So it's reducing to 100,000.
So what will happen to the 10,000? What will happen to the 100,000? Is that going to be a gain or loss?
It's going to be a loss.
Are you sure?
It's a gain.
It's a gain. To the
It's a
company,
gain.
it's a gain.
Oh, sorry, it's again.
So we have ordinary shares. We have the ordinary shares to be what? 100,000, right? So this is the new value of the ordinary shares now, 100,000. That's why I brought it over here because the 20,000 is supposed to be in account, we didn't record it. So we now bring the new one now, which is 100,000. Let's move on. What again? They are also to subscribe for a right issue on the basis of 1-for-1 at 1 cedi per share. What is right issue? What is right issue? Arimeyao, what is right issue? Arimeyao, can you hear me? What is right issue? Right issue, any idea? Can anyone hear me?
Yes, we can hear you.
What is right issue? The person said you can hear me.
Please, my network is not good.
Okay. Christina, what is right?
Right issue is a form of an offer that a company gives to its shareholders to buy more of their stocks at a reduced price or a discounted price.
Okay. Okay. That's nice. So right issue is a way of company raising shares, raising money by issuing shares to the existing shareholders in relating to their proportion. So what we are going to do is that this right issue will be made to the what? To the existing ordinary shareholders, not the new ones, the existing ones. So what is the value of the existing ordinary shares? Is what? 200,000, isn't it? So if they are doing 1-for-1, it means that bring one old share and take one new share. So it means that they are going to issue them the 200,000 shares again at 1 cedi, which they are going to pay for it, So this has nothing to do with the capital reduction account. This transaction is between cash and what? Ordinary shares. They are issuing new shares and they will pay cash for it. And this issue will be based on the existing shares, not the new 100,000 shares now. This right issue are made to the existing shareholders. So it will be made to the old shareholders, which is the 200,000 shares. So they made a right issue 1-for-1, bring one old for one new. So they will still buy the 200,000 shares again at 1 cedi. So the entry between this one is cash or bank, which is 200,000. Then we go to bank account. A bank account, you ask yourself, is there any balance? The bank has any balance from this one? Do you have any balance from the bank? Do you have balance from the bank? Okay, we have bank overdrafts here, which is what? 36,000. Which side are we going to find a bank overdraft for a bank account? Which side?
Credit side.
Credit side. So we have balance brought down here. Balance brought down to be 36,000. So the new issue now will bring cash. So we have ordinary shares here, which will bring additional cash, which is ordinary shares here to be 20,000, 200,000 rather. So we are done with that one. That particular thing will not bring anything like gain or loss. They are giving a new issue. So there won't be anything like loss or gain. Let's come to the C. The debenture holders are to accept 5,000 ordinary shares credited as to 1 cedi each in full settlement of the interest payable. So how much ordinary shares are we giving them? At what value? What is the total value of the ordinary shares are we giving to them? What is the total value of the ordinary shares are we giving to them? 5,000 at 1 cedi. What will be the value?
5,000.
5,000. Then the question is, how much are we owing them as interest? Interest payable on what?
13,000.
13,000. So what is happening? A gain or loss?
We are gaining.
We are gaining how much?
8,000.
How much are we?
8,000. 8,000.
So interest or debenture interest. You are owing someone 13,000. Another person say, "Oh, give me 5,000. I will take." It means that the person is letting go of 8,000, which is a gain to you, because you should have paid that money, which is a gain to you. So what will happen? Where would the 5,000 go? The 5,000 that we are giving to them as equity shares, where would the 5,000 go? Which account would the 5,000 go?
Ordinary share.
Ordinary shares account.
So this will go to ordinary shares, debenture interest. The ordinary shares will now increase by 5,000 because we are giving them to the debenture holders. Let's look at the C. Post-acquisition reconstruction debenture interest rate is to be increased to 10%. So what is the debenture interest now? It's 8%. Now they are saying that after the reorganization, we should change the 8% to 10%. That's what they are saying there. Post-reconstruction debenture interest rate is to be increased to 10%. A further 20,000 of the 10% debenture is to be issued at a discount of 2% and taken up by the existing holders. What is the meaning of this? Christiana, what is the meaning of this particular thing? Post reconstruction, I have explained that already. A further 20,000 of the 10% debenture is to be issued at a discount of 2% and taken up by the existing holders. What is the actual value of the debenture? The new issue, what is the actual value?
20,000.
But what is
20,000.
happening? We are giving them 2%. We are giving them 2% discount. Are you getting it?
Yes.
So how much are they going to pay to us?
19,600.
19,800, isn't it?
Yeah.
So what will happen to this one? We are going to receive cash or bank, isn't it? So this money will be paid to us through bank. The thing is 20,000, but we are giving them a discount of this one. So they will only pay 98% of the 20,000, which is 19,800. The
19,600
yeah. So the 200, what happens to the 200? The discount that we are giving?
will be a gain to us.
No,
Will be a loss.
we're supposed to take
Okay.
20,000 from the people, isn't it? But we are not giving them 2%. Who is going to take up the 2%? It's not the company.
Okay.
We are losing.
We are losing. So this one, they say post reconstruction debenture rate is to be increased to 10%. Further this one. So the assumption is that this further issue will be after the reconstruction. Will be after the reconstruction. So the discount, which is the 200, the discount, which is the 200, you can take it to your statement of financial position as fictitious assets. Have you heard about fictitious asset before? Discount is an example of them. Preliminary expenses or formation expenses is an example of them. Sometimes the company will decide to, instead of them expensing of some of the expenses, they will decide to capitalize them. And one of these one is a discount. But let's assume that this discount will be expense. So we send it to what? Capital reduction account as an expense. Are we there? Are we okay? Okay. So you either expense it off or you capitalize it. If you capitalize it, then it will be an asset, which you call fictitious asset. But let's assume that we are expensing this one because since we are reconstructing, you need not to have fictitious asset and any goodwill, those kind of things. So let's do this one. So what will be the new value of the debenture now? What is the value that we have first? 80,000, isn't it?
Yes.
And now, right now, how much are we issuing?
I issue 20,000. It's 19,800.
No, the 19,800 is the money that we are collecting from them. And we are going to take the expense, which is 200. So you can see that the company received cash 19,800 and expense 200, which is 20,000. So the debenture will still be valued at 20,000. It is 20,000, but we want to be fair to them and give them discounts. It doesn't mean that the debenture that they will be having is what 19,800. It's 20,000 that they are buying. It's just like someone is coming to buy something from you. The thing is 20,000. You decide to give the discount to the person 2%. Doesn't mean that you not give the thing which is 20,000 to the person. Are you getting the argument? So the debenture will still
Okay.
20,000. If you are giving me discount, doesn't mean you not give me the value of the goods add to what I'm supposed to pay before you are giving me the discounts. Can you see the Excel sheet? Please, can you see the Excel sheet?
No, the PDF is covered there.
So you can't see, sorry. Oh. Someone say you can't see. Oh, sorry. So now it's clear now.
Yes.
Yes, thank you.
So we can, so you should have said that long time. Someone just told me. But you follow how I was able to write these figures here. So I have the bank account, so okay. So the debenture will still be 20,000 plus the 80,000. So the total debenture that we are going to send to the statement of financial position will now be 100,000. 80,000, we issue 20,000. Are we there? 6,000 of the director's loan is to be cancelled. The balance is to be settled by issue of 10,000 ordinary shares credited as 1 cedi per share. So what is the value of the director's loan? What is the value of the director's loan?
60,000.
60,000.
But we are canceling what they decide to cancel 6,000. Would that 6,000 be a gain to us or loss?
Be again.
Okay. So director's loan. Director's loan will give us 6,000. So what will happen to the remaining 10,000? What are we doing to them? The remaining 10,000, what are you doing? We are issuing them equity what?
Shares.
Yes,
Equity shares.
this will increase. We have the director's loan here, the equity shares accounts. Director's loan, which will give us 10,000. Can we move on?
Yes.
Okay. The next one is goodwill and income surplus are to be written or off. Would this be a gain or a loss? Are they going to be a gain or loss? We are writing off assets just like that. Is the company losing or the company is gaining?
It's
The
losing.
company is losing.
So we have a goodwill. Goodwill will give us, how much is the goodwill? Goodwill is it 60,000? Goodwill is 60,000. Arimea, don't worry. The recording will be there. You play. What of the retained earnings, the income surplus? Is it going to be a gain or loss? The income surplus, is it going to be a gain or loss?
Need to reduce it.
It will reduce our value, so it will be a loss.
It will be a loss because they are owing us. Okay. So income surplus will be a loss. So every time when you are doing reorganization, you write off the income surplus, whether the question is so or not. You write off goodwill and income surplus. You can't be making loss and still be saying that you have a good name. No. So income surplus is 40,000. All right. Okay. So the next one is the investment in shares is to be sold at the current market price of what? At the current market price of what? So let's come to the investment in share is to be sold at the current market price of 1,000, isn't it? Yes. So what is the value for the investment in shares? The investment is how much?
27,000.
You are selling at how much? 50,000.
60,000.
60,000.
So what are we
50,000.
doing?
Yeah,
We
again.
are gaining.
Gaining. So it will be a gain. By how much?
23,000.
So if you sell, how are you going to receive the money? If you sell, how are you going to receive the money? By cash, isn't it?
Yes, sir. So you debit the cash.
So you debit your cash. All right. So we come here, we have our bank accounts. We have what?
Investment.
We are going to have investments. By how much?
50,000.
Okay. Are we following?
Yes.
Okay, let's move on. The bank overdraft is to be repaid. We have repaid the bank overdraft already. That one we have done it already. Since we are putting it over here, it will be written off against these figures. So we have repaid the bank overdraft already. You don't have to write it off. You are not going to write it off. You are going to repay it. So you put it in the bank accounts. 46,000 is to be paid to the trade creditors. Now, how are we going to pay it?
By cash.
by cash or bank. So we have creditors here. Creditors is how much? We have creditors to be 40, what? 46,000. So our cash will reduce. Okay, let's move on. So 46,000 is to be paid to the creditors now, and the balance to be deferred to third quarter of what? Year 2019. So let's count to the balance. Let's count to the creditors. What is the trade payables figure?
96,000.
Now we are paying 46,000. How much will be left?
50,000.
So we are going to defer the 50,000 and pay it later. So the creditors balance that will be in the statement of another position will now be 50,000. 10% of the trade receivables are to be considered what? Irrecoverable. So what is the trade receivables figure?
70,000.
So 10% of that will give us what?
7,000.
7,000.
And the bad debt, gain or loss?
Loss.
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 So we come here,
Loss.
bad debt should be into bracket 0.7, 0.1 times what? 70,000, right?
Yes.
Now give us 7,000. So what will be the balance for trade receivables now? What will be the new balance that we send to statement of financial position?
63,000.
63,000. That is cool. Should we be doing the statement of financial position two at once?
Mm,
No, sir, please let's finish and then we'll just pick
Okay.
the figure.
Okay. Let's count to which one?
J.
Let's count to the J. The remaining assets we are valued as land is 166. So the question is, how much was the land first? How much was the land first?
156.
So what is happening? An increase in value by how much?
I think 10,000.
So that will be a gain, isn't it?
Yes.
10,000. So the new value for the land now will now be 166. Okay.
Yes.
Let's go to the next one. Building is what? 60,000. Then you ask yourself, how much was the building first? Building was how much?
27.
27,000. But now it's how much?
60,000.
What is happening?
33,000 gain.
So it will be a gain, isn't it?
Yes, sir.
So we have 33,000. Right? All right. Let's count to the next asset. The next one. The next one is what? This asset is equipment. Equipment is what?
Sometimes, given our level of what we consider
10,000.
empowered globally, empowered. If you say global, I say somebody says an artist needs development.
Okay. Our equipment is 10,000. The new value of the equipment is 10,000 now. Okay. What was the original figure? Let's go and compare. Equipment was what?
11.
What is happening?
You have lost 1,000.
Okay. So equipment is now a loss of what? 1,000. Okay. Let's come to the next one. Inventory is now 50,000. What was the inventory then? Inventory was what?
120,000.
So what is happening?
We've lost 70,000.
Loss of what?
70,000.
70,000. Do you have any one again? Okay. So what we do is that,
Sir,
yeah.
sir, please, just a quick one. Where the bank overdraft was to be repaid, assuming that the bank overdraft was not to be repaid, what was going to happen?
Then what do you think will happen? You are owing someone, the person say, take the money. What are you going to do? It's not against you.
It will be a gain, yes.
Then we send it to reduction account as a gain.
Then what about the bank account?
The bank account we just prepare, there will not be any balance on it. So we just come and add the new additions now.
Okay. Okay.
Are you okay now?
Yes, I'm okay.
Okay. So let's add. So which side is higher?
Debit side.
Debit side is higher. So the balance
So
will
the
be
losses are high. The losses are more.
this. The credit side is lower, isn't it?
Yes, sir.
What is the difference?
7,200.
So how are you going to name the 7,200 now? Last time I said something about this.
Oh,
How is it going to be named? Kevia, what did I say about this one the last time? When the debit side is higher than the credit side, the difference is named as what?
It's a negative.
And which will
So
be
it is
named as
named
what?
as goodwill.
It's a goodwill. We assume that all the goodwill has not impaired. So this is a goodwill. Are you okay?
Yes.
Okay. But if it is here, it should be capital what? Surplus. It's a gain. Okay. So let's come to the ordinary shares account. Let's add. So we have, this is the
Yeah,
balance.
please, the equipment,
Yes,
the capital reduction account,
yes.
is the figure. It's supposed to be 1,000.
Supposed to be,
1,000.
I made it 10,000, sorry. Oh,
Yes,
sorry,
please.
sorry. So that side should not be bigger. This side should be bigger rather. So it's supposed
Yeah.
to be capital surplus rather, isn't it?
Yes, please.
Okay, so what will be the difference? What should be the difference? $1,800. Am I correct?
Yes, please.
Okay. So let's come to the equity account. Let's come and close the equity account. Don't come and prepare any accounts because they have asked only three accounts. So if you're preparing an account, that is at your own, you are doing that at your own risk. But sometimes you prepare numerous accounts to know how the entries will go. We are not here for that. So this will give us 355,000. And this one also will be 355,000. All right. Let's come to the bank accounts. Bank account, what are we going to do? We total this. Okay. So let's come here. It will be this minus this minus this. Okay. Then we have balance. What's balance? That. We have 269,800. Okay. So let's come to our statement of financial position. Statement of financial position, assets, 01 January 2019. So we start with assets. Don't go and say you are coming to group the asset, or just name it anyhow. Don't group any assets.
Sir, please, I have a question.
Okay.
It's concerning the bank overdraft is to be repaid.
Okay.
I didn't see any treatment on the cash flow.
How if you are to pay, who is that? If you are to pay the bank overdraft, it means that you have to use the money to pay the bank overdraft. How do you pay the bank overdraft? As soon as the money comes to your account, the bank will deduct. So it means that they are saying that the bank overdraft, you are not to write it off. You are not to write it off, so you have to pay. So if you are paying the bank overdraft, it means that as soon as you receive the 200,000 from the ordinary shares, you pay your overdraft. That is why we put the overdraft over here, so that it will be deducted from the 200,000, so that it will show that you have paid the overdraft.
Okay, thank you.
So if they say the bank overdraft should not be paid, then it means that it will not be in the bank account at all. We just write it off as capital reduction item. So they are just saying that the bank is not forfeiting its debt. They are not giving their debt away, as how the directors and other people are trying to have mercy on the company. The bank is not willing to have mercy on them. That's what they're trying to do. All right. So let's move on. What will be our first asset? What is our first asset?
The land.
First asset is land. What is the new value for the land now? 160 what? 6,000.
6.
The next one is what?
Building.
Building. The new value is how much? Is 60,000. Okay. The next asset is what?
Equipment.
Equipment.
Equipment. So equipment is how much now?
10,000.
The new value is 10,000. Are you sure?
Yeah, the previous value was 11,000.
Okay. It's 10,000. Okay. What is the next one?
Inventory.
Now inventory, we are going to name it current asset. So
Okay.
should we prepare the way the question also prepare it?
No.
We should separate them, isn't it?
Yes.
Okay. So our total non-current assets. So we come to current assets. So the first current asset is what? Inventory. The new value for the inventory is how much? The new value for
50,000.
50,000. Okay, let's put it here. 50,000. The net asset, the next one is what? The next asset is what?
Trade receivable.
Pay receivables. Pay receivables. Do you have to do some adjustment to them? Are you writing some of them as bad debt?
10% of the trade receivables are to be considered irrecoverable.
Are to be considered as what?
Irrecoverable.
Over as bad debt, isn't it?
Yes, please.
So what portion are we going to have now?
6,000, 63,000.
63,000, which is the same as 90% of the original fee. So the next one is what? The next one should be cash or bank, isn't it?
Yes, sir.
So the bank account now is positive, so we take it to assets. The bank account now is positive, which is 18780. 18780. So we have 18780. So this will now be our total current assets. So our total assets now be this plus this. So let's come to equity and liability. Equity and liabilities. So the first one is equity. So the first equity will be ordinary shares, isn't it? The value of the ordinary shares is what? What is the total value that we are bought in? 355,000. $355,000. The next element of equity is capital surplus, isn't it? We have gotten some capital surplus on the.
There, please. Concerning the capital surplus,
Okay,
when you go to the capital reduction account,
okay,
the 2% discount that was given.
yeah.
Please, I want to verify some 2% of 20,000
Is how
is
much?
400.
It's 400.
400.
Oh,
Please, someone should confirm for me, please.
so it means that the bank will also be having 19,600 rather. Is it 400? Is it 400?
Yes.
100.
So this will be 600. Oh. So this will be 1,600, isn't it? All right. So what will be the next one? The next one, if you like, you can leave it like this and bring preference shares. You can total this one before you bring the preference shares. The preference shares now is you are going to have 30,000 at 8%. 40,000 will be converted to equity shares. So we'll be having 30,000 for preference shares. So 8% preference shares. 8% preference shares will now be 30,000. Okay. Let's count to long-term liabilities. The first long-term liabilities in the question is what? Is debentures, isn't it? 80,000. We issue additional 20,000. So debentures, which will now be 10%. They say they are going to increase the post-reconstruction to 10%. So 10%. This will now be 100,000. 80,000 plus additional one that we issue. When we come to current liabilities. Current liabilities. For the current liabilities, what do we have? It's not only trade payables. We have only trade payables. and trade payables. We have following trade payables. 96,000 was paid now. So how much will be left? How much will be left for the trade payables?
1,000.
50,000.
50,000. Okay. So trade payables will now be 50,000. 50,000. Let's total all and see. This plus this plus this plus this plus this. All right, so this is all that we had to do. This is all that we had to do. Do you have any question somewhere? Do we have any question to ask?
Is it a past question?
We are all tired though.
Yeah, past question, please.
Is that?
Is it a past question?
I can't hear you.
He was asking if it's a past question.
Someone say he has a question.
He wants to know whether it's a past question or not.
No. This is not a past question.
Oh, thank you.
All right. This is my university question. It was one of the exams that I wrote, level 300, last semester. All right. But the one that we saw first, the first example that we did was a past question, which was a question 1. Maybe 2015 or something. I've forgotten the date. I've forgotten the year. What ICA was doing is that, you see, the time that they were doing corporate reporting before they change the syllabus, they normally bring those questions to the exam, to the current one. About the capital reorganization, those are the things that they do. They normally bring the old questions. Okay, this one is a past question. The MM is a past question. 20, I've forgotten the dates, but it's a past question. All right. So tomorrow we look at where the company is indifferent, whether to close down or to carry out the reorganization exercise, which is the issue about liquidation, whether they want to liquidate or they will restructure. So tomorrow we look at that one. Are we okay now?
Yes, sir.
All right. So if we don't have any question, we are done with capital reorganization. The 2 questions are okay. Whatever you are going to meet in the exam is the idea of whether it's a gain or loss. Then you send it. If it is a transaction happening between cash and any other thing, you bring it to cash and the other accounts. That is all. All right.
Tomorrow's class, will it be a combined class?
Today,
Tomorrow's class will be a combined class.
tomorrow,
Yes.
the first class was combined class for FR and then
I'm saying tomorrow. Tomorrow.
no, it's for only FR. It's only for only CR. It's for only CR. All right. So If we don't have any issue, then we call it a night. I will try to find another question on capital reorganization and send it so that you try it on your own.
Okay.
Okay. Then see you tomorrow.
Okay,
Okay.
good
Good
night.
night.
All right.